Good morning. It's Dustin with Highway One Capital. Today is Tuesday, April 28th, right about 12:30. The markets are off a little bit this morning, with the Dow down about 78 points. S&P's off 35, and the Nasdaq's off about 210 points. There were some concerns with OpenAI this morning with revenue and new users coming in below expectations, and that's caused a sell-off, and especially with some of the chip stocks and the technology space in general. However, the S&P and Nasdaq are currently trading at or close to all-time highs. So the market's still pretty bullish. The risk appetites remained surprisingly resilient, given that oil, is high right now. Brent's trading only about $8 below its March 31st peak of 119. Markets appear to be looking really through the current tensions and assigning higher odds to further de-escalation with Iran, alongside a relatively rapid reopening of the strait. That's obviously what the big topic is right now. We don't know when the Strait of Hormuz will open. Some elements of the latest offer from Iran suggest there's progress, and a potential near-term deal is possible. Trump posted this morning on Truth Social that Iran has admitted that they're in a state of collapse, and they want the U.S. to open the strait as soon as possible. Whether this is true or whether it's a negotiating tactic, I mean, that's up for you to decide. But regardless, it does look like there is progress being made, and we're hopeful that there's going to be resolution sooner rather than later. But the stock market's pretty much been resilient through this. The bond market not so much, and we'll talk about that. But turning our focus on earnings, it's a really big week for earnings, with 5 of the 7 Mac companies are set to report. You have Google, Amazon, Meta, and Microsoft reporting tomorrow, and Apple reports, I think, on Thursday. So there's going to be a lot of focus on not only current earnings, but really, I think, a hypersensitivity on what the forward guidance is going to be from those 5 market leaders. Shifting gears, as you know, Tim and I focus a lot of our attention on and research on monetary policy and the impact that has on the global economy. That kind of, we look really closely at monetary policy in terms of what our risk budget is going to be, and whether we're bullish on the economy or not. And this is it's a really big week for monetary policy, with the central banks are it's really busy. You had the Fed meeting, you have the European Central Bank meeting, you have the Bank of England meeting, you have the Bank of Japan. They're all meeting this week. So I think by the end of the week, we should get a much clearer picture on where we stand with monetary policy, not only now, but hopefully we'll get some clue about for the rest of the year. So one particular note that this is likely to be Jerome Powell's last meeting ever as Fed chair, although the market's pricing in pretty much 100% chance of no rate changes this week. We will be listening to Powell for tone and language for any subtle signals about the Fed's future path, because is he going to want to make a statement? It's going to be interesting to monitor his comments. And the reason why everything is so sensitive right now is that interest rates are really starting to flash some warning signs that we have to pay attention to. The rise, especially at the front end of the curve, definitely has our attention. The 2-year yield has broken out above the 200-day moving average, and you have the 10-year is, I would say, uncomfortably high right now at about almost 4.4%. I think it was 3.36 as we started this. So it's still within that 4 to 4.5% that's been our base case and our forecast for a while. But we're clearly bumping up on that 4.5%, and we could break through that. So maybe the silver lining there being that the moves in interest rates with rising oil prices is much more muted today than it was last month or even when the war first broke out. So we aren't in the danger zone with rates, but they certainly have our attention, and we'll keep you posted on the progress as things develop. But this will clearly be an interesting week, both with earnings with the central banks around the world, and we should have a much better handle on what the monetary policy is going to be. So busy week for sure. Thank you all as always. You guys are great, and we hope you have a wonderful week. And just a reminder that every day is a gift. So enjoy it. Thank you all very much.